What is an ARM? ARM stands for an adjustable rate mortgage, and as the name implies, this means that the rate on your mortgage can adjust up or down. What you're going to find is that most of these mortgages will have a fixed rate period for the first 1, 3, 5, 7, or 10 years of that loan. Life is good, but then after that, the rate can start to adjust up or down depending on what's going on in the market. So it begs the question, why would anybody choose to utilize an ARM? Well, the main benefit of an ARM is that it has a lower rate when you compare it versus a 30-year fixed. So if you have someone who's very payment or rate sensitive, that lower rate can seem really attractive. However, I would caution against the risks associated with an ARM. Mainly, eventually, that rate in your payment can start to adjust up. And if it does that, are you going to be okay with those fluctuations? Your average American consumer, the answer to that question is going to be no. They'd rather have a fixed rate, know exactly what your payment's going to be over the life of that loan. When used appropriately, an ARM is perfectly fine, and when it's explained thoroughly and the person understands what they're signing up for. So an appropriate use would be, say someone knows that they're going to be out of that home, they're going to be selling that home before the fixed rate period expires. Or maybe they have enough cash sitting around that they could pay off that loan once the rate starts to fluctuate. If it starts to fluctuate too high, they could just pay it off. They're not really concerned about that. Completely appropriate. However, during the housing crisis, ARMs, rightfully so, got a lot of flack from people because they were used as instruments. They were pushed by realtors and mortgage lenders as a way to just get into a home. Hey, you don't qualify for that fixed rate payment? Don't worry about it. We're going to get you an ARM. We're going to get you into that home. Don't worry about it. We're going to be able to refinance you later. Well, we all know how that turned out. So as rates continue to rise, it's going to be becoming more and more tempting to choose that ARM. I would caution against it. Understand what an ARM is. If you have any questions about whether you should or should not be in an ARM, give me a buzz. Have a great day.